any agent in Nigeria. And we have the Paga Business Service, which is our integration partnership that allows other businesses to build on our own service to serve their customers. For example, um, we have connections, integrations with each coast. So let's say a place like Nigeria, uh, Ibadan, electricity distribution, Benin, Kano, and so we are integrated into those for us to sell us electricity. So you as a person who want to buy electricity, you can come to us directly through the other app to buy that electricity and your meter will be charged, or you go to those applications to buy from them, they will buy from us and sell to you. Um, that is one way to look at the services that we offer. Um, the business itself, the company itself has been in existence for about 30 years. Um, so this implies that we have a large market share of and so we understand that and we have existed a lot before many of the fintechs that you may now know today. So to go to the topic at hand, understanding competition as it relates to the fintech and the advantages a fintech have. One thing you want to understand is the fintech industry is a margin industry, um, which implies that it is highly regulated by the CBN, right? Because of fintech, we are arguing people's money. So every participant in the industry are licensed to do a particular thing, right? Just for them to be able to go to market with the product, it is usually that they are in partnership with another company who has another license. For example, if you are an insured person, if you buy a car, right, you need insurance for your car, right, for you to be roadworthy, for you to be able to drive it around, insurance. Now, for you to go to that third party insurance, for them to be able to provide you that service, they need to partner with other existing fintech companies. Why? Because people's money, right? The license to hold people's money can only be to a savings company, right? A microfinance bank, a regional bank, right? Those are the ones that can that are licensed by the CBN to hold your money, right? So if the insurer is going to listen you, they would typically send you to that microfinance bank or that bank that they use to receive payment, and then they vend the payment, they vend the bill, the insurance that you want to buy from another service. So they will maybe come to us to buy that service and then sell it to you. In another scenario, if you are familiar with savings company like Parwise, Bigginvest, etc., you will know that they have several services, right? They allow you to save money with the consumer application, which is the Piggyverse itself app, right? The same. And the same company has another product, patronize, that allows you to sell like a marketplace to sell stuff, right? And this selling stuff, they don't have the access, they don't have the authority in that space. In one app, they have the authority, they have the license to be able to collect your money and hold your money, right? In the other one, because it's a business, right? And for you to be entitled, right? If you're opening a business account, one of the criteria you are going to consider is if I'm running my business, I need money to run my business. Will the bank borrow me money, right? So this is one of the considerations you will take before opening a bank account with the business bank account with any financial service, right? But a company um, piggy bank, piggy vest, cannot borrow you money. They are not a bank. They don't have that license to be able to borrow you money. So if you look at that product called Patronize right now, it means that for them to be able to give you a business account with Patronize, they need to partner with a bank that has that license. So to the outside world, to a merchant, to an average person that is out there that is wanting to use that service, what you will notice is you are dealing with patronize, you are dealing with piggy vest, right? But the partnership that goes on to be able to allow that product come to market, right? Using another bank's um, using another bank's license. Same thing with another business like Tribras. Tribras is also a uh, business related, SME related banking service, right? The fintech itself, that fintech called Brass, right? That is the one that you are using, that you have downloaded their app or that you are using their application, their web service. That fintech itself does not have the authority, the license, right, to hold your money or to borrow you money, right? So they need the license from a bank, from a established regional bank, or um, from a national bank, right? And this relationship, this partnership, is what allows that kind of product to come to life. So, first thing you want to put at the back of your mind as you consider dealing with fintech industry and competition is that every person, every player in the fintech industry, every participant is your potential partner, is your product person, right? At some point in the future, you cannot consider them as your competitor outrightly. The same way fintech will beat banks, right? It will not happen in Nigeria as long as there's still CBN because banks have the license, right? And licensing for banks, which is like the old betting license, and only three entities in Nigeria have switching licenses, which is InterSwitch, NIBSS, which is operated by all the some other entities have it, but those are the primary ones. This license, this switching license supersedes the banking license. But if you look at the banking license, for any entity to be able to get a banking license in Nigeria, you need to have assets, right, of $50 million deposit. And this in terms of the between Sicilia Eagles bank and some other banks, right? So essentially, what I'm saying is that $50 million that companies will just hold um, in a particular deposit with the CBN and not touch for a period of time, right? So every other person is just partnering with the banks right now to launch their product. So they are not direct competitors. You must understand that. If you are if you are launching and saying that this person is my competitor, I am not partnering or work with them, or we are fighting for the same customer, losing your is not how they operate. That is one point. The second point is understanding who the users are and their psychology in regards to money in Nigeria. A typical user in Nigeria has more than one banking partner, banking, financial company that it banks with, right? So it is very common for us to see a student that has account with GTB, Zenith Bank, etc. like that, right? It is very common for us to see a worker that has a salary account, a spending account, a savings account, right? In different industries, especially in this region where people are reinforced, let's say first, by policy, by network issues, right? To try out different banks when they are trying to send and receive money, especially in this particular time where we are dealing with the cashless policy uh, implementation, right? So what you all that we see in Nigeria, the data shows that they have about three that they are trying or they are playing with. So in acquiring users, the goal is to allow them to test your service and to show them your own unique offerings, why they should use your service and what you are trying them and what you are hoping for them to use it, right? But as you are trying to attract these users to, you are also forced by regulation, as I said, to do KYC. KYC in this sense means know your customer, and what this means is that we are expected to understand whom our customers are and where they are coming from. So we must know their addresses. Essentially, we want to know their bank data. This is a requirement. This is part of the law in Nigerian by the CBN, right? Um, this is the part of the law by the reason why this exists, such that when there is fraudulent activity, the bank institution are not held liable, right? When they are tracing that transaction, they can know this is the person who traced the transaction, this is their details, and then when the government comes for that details, they can release those information. There are 3 tiers of KYC. KYC one level one, two, three. Three is the maximum level for the average user, and there are ranges for these KYCs, right? So typically level zero is that you can deposit any amount into the account, right? At any level. You can deposit if you have 10 naira, you can put it in your account. If you have 1 billion, you can put it in the account at any level. The restriction comes when you want to remove your money and the amount of money you can remove per unit time. So what that implies is at the level zero, you cannot deduct than 50K per day, but you cannot remove 50K more than 50K, 50,000 naira per day. And you cannot remove, if I remember, I think it's 100,000. At level 3, you can do 500K, above 500K per day, like you can deduct. So deduct implies that you can do transaction above 500,000 naira per day without your account being flagged for error, without blocking your account for anything, right? So for this reason, each individual that are trying to use the service, and as the banks are trying to recruit the users, level of game or level of balance that you need to employ, right, to make sure that this works out, right? Ensuring that the people you are inviting have the level of the amount of transaction that would make a change in the financial balance of the person that is inviting you to create that account, right? So noting this now and understanding the kind of industry, the kind of um, industry and markets that we have, we now get to understand that competition is not the first step to anyone who is a product manager, product person in the industry. The first idea is partnership, right? The first thinking is collaboration. How do we come together? How do we make it work together? Imagine you are launching a loan product. You want to loan company, you want to loan money, right, to people. If you want to do this, first you need a wallet service that allows you to hold money, right? That is a license on its own. You need a license that allows you to loan money to people. That is another license on its own, right? Typically, as a startup that is fresh and coming into the industry, for you to be able to get these two licenses for the different regions, because now you must get a license for the state that you are operating in. So if you are in Lagos or if you are in Abuja, you must get for that particular state, for that particular city first. So if you are in Abuja, you must hold license. Then you may get for your region, you may get north central, northeast, or you get for across the nation. Right? These are tiers, right? That implies that the kind of customers that you can service, the kind of people that you can reach out to, where your primary audience are, right? And these are costing you money. Because for you to get a savings license to hold people's money, that is one. Ability to hold people's money. Ability to loan people money, right? These two alone will take all your investor money, all the money that you must have raised during your financing round. So the easier route will be to find a partner, find a company, a bank like Pagaye that can allow you to hold money. So we have a wallet service via our API that allows you to hold your users' money, right? So we have that license, right? Why should you? We have already paid CBN to hold that license across Nigeria, right? You are just raising 100K, $100,000. Do you want to give CBN all your $100,000, or you want to come to us and say we should give you our license, our wallet, not our license now, our wallet API, which you can give to your users. Your users can use it to send you money. So you can hold money on behalf of your users, right? That is one, right? Then you go to a bank or a microfinance bank. Microfinance bank typically have licenses to be able to loan people money. So something like Lapo is a microfinance bank, right? Universities typically have microfinance banks. Communities, right? Government government staffs usually have microfinance banks, right? You approach one of those microfinance banks to partner with them, right? So officially in the document, right, it is the microfinance bank and their license that is giving out the loan to people, not you in the fine print of paper by law, right? But you are their public entity, you are their public face, right? You are the one selling that product. So you ask me that what is the benefit? Why would a microfinance bank want to listen to you to allow you to sell their product? Why would us want to listen to you to use our wallet service? So it is a business for us. We license the product on commission, right? So if you are building the loan company and you want to receive payment from your users, we have those like kind of licenses. When you talk to our business and technical account managers, they would describe how much you need to pay per commission for whatever amount of money that you are bringing through those wallet services. And once you receive those wallet services, the next question is now you talking to the microfinance bank. You also do the discussion on if I give out 100,000 naira to somebody, this is the person is going to pay back 120K. I would take maybe 2,000 naira out of the money. The microfinance bank takes 18K, and the money, the remaining capital itself, the primary capital, you can loan it out to another person. I don't know how the conversation or the negotiation would happen in that case. What this allows you to do essentially is that you are launching your product, you are already in the market, you are interacting with users, and users are using the product, right? But you don't have those licenses because you don't have the money. As your product grows and as you are able to expand in the market and you gain market share, you can decide to approach the CBN and then get your own license. But this is actually very tedious. Just for you to understand, any of the licenses in the CBN, right, by due diligence, will take up to 18 months before you get there, right? So the typical route that startups or new fintechs would go is instead of approaching the CBN, what they would do is to buy out an existing licensed organization, right? So what you will now notice is that you will see a microfinance bank that belongs to the staff of maybe a what's it called? Maybe a school, a university, right? Or a government agency. A, the finance fintech company may access them, check their company. If it is okay, they can buy out percentages of their entity, right? Maybe 50%. Since now they have a stake in that company, they can do more things instead of just doing licensing, right? They can do more things with that partnership that they have. Or they outrightly buy out that entity, right? The entity will retain its name, will retain its identity, its branding, right? But the ownership has changed, right? This is easier in the long run when you consider due diligence that you have to do with CBN, with the microfinance bank itself, right? It is easier on the long run. But then the CBN still has to sanction, right, and authorize that the takeover is happening, right? If they feel that something is off, or they don't want it to happen, or they want you to come directly to them to get the license, then you cannot get control of that entity that you. But this is a later stage when you have gained entry into the market, or you have raised new financial rounds to be able to reach market share. So understanding that for you to be able to build market share at the start of a startup, your only means of survival in this industry, the only way you can survive is by partnership, collaboration, finding businesses that can work with achieve your goals. You are done for in this industry. It's not going to happen. It is not going to happen because you don't have the fees to pay. And when CBN comes knocking, or when EFCC comes knocking, they are going to take over all your assets if they find out that there are fraudulent transactions going on in the business, right? So, based on this conversation, um, you from the onset, from the time where you are designing your product and where you are getting the product out to the market,